Hello everyone and welcome to the part 2 of our series Basics of Stock Markets. Without wasting any time, let's proceed. Suppose you want to start a new business and you have a great idea to build a smartwatch with new features which are not existing in market. So what you will do? You lack funds. So the first thing you will do is reach out to your nodes. Like you can reach out to your friends, your families, etc. But they will not be able to give you that much fund to start your business. So you can approach investors. Pitching to the investors is very crucial part. You have to present your product in front of them in such a way that they will get impressed and invest in your business. The first investor that will be investing is known as angel investor. This is a pre-revenue stage. So the investor is known as angel investor because he has put a blind bet on your business. He or you both don't know that if the business will be successful in future or not. If there is any profit, then he will be the one who will get profit, and if there is loss, then he will be the one who will suffer. So it's a blind bet. So this is not a type of loan the investor will be giving. This is a type of investment. The initial fund that the investor will be giving to the company is known as seed fund, and the fund will go directly into the company's account, not the owner's account, because it's the company's money. And what the investor will get in return? The investor will get the share in your company. Suppose you get the total funding of 2 crores. Suppose in that 2 crores, 1 crore 20 lakhs is given by the promoter, and 80 lakhs you are able to get from the angel investors. So suppose you have 3 angel investors. Angel 1 will get 10% share, angel 2 will get 10% share, and angel 3 will get 20% share of your company. So the total share that is allocated is 40% and is known as issued share. Secondly, 60% of the shares are known as unallocated shares that are still with the company. So the initial price of the share fixed is known as the face value. In our example, we have taken the face value as rupees 10. So the total price of allocated shares is 80 lakhs. So 80 lakhs divided by 10 equals to 8 lakh shares. So 2 lakh shares are with angel 1, 2 lakh with angel 2, and 4 lakh with angel 3. So now the operations are well supported by the money and we are running the business smoothly. But no one is satisfied by the business, and they should look forward to increase the business to achieve new heights. Suppose you want to start a new plant at a new place, but that requires more funding. So what you will do? Firstly, you will prepare a pitch. For preparing a pitch, you will need to evaluate how much money is required to start a new plant. After that, you will be pitching in front of venture capitalists. They'll be the one who will provide the next series of funding. Remember, at the first stage, we got the investment from angel investors, and that stage was pre-revenue stage when the company was not generating any revenue. But this time we are into the business and we are generating revenue, so we can have some terms and conditions for the money to be invested by venture capitalists. The money that will be invested by venture capitalists is known as Series A funding. Now look at this table very carefully. The first part shows the previous investment by Angel 1, Angel 2 and Angel 3. Previously the venture capitalist 1 was not present. Now suppose that the venture capitalist is ready to invest 5 crore rupees in your business, and in return we are giving 20% of the shares, that is 4 lakh shares in return. So now the 20% is equal to 5 crore. So the 100%, that is the total evaluation of the company, will become 25 crores. So now the angel one, who now also has 10% shares, but previously the value of the shares was just 20 lakhs. Now it is 2.5 crores. Same with angel 2, 2.5 crores, and angel 3, 5 crores. So you see how the total evaluation changes as the venture capitalists invest into the company. Now moving ahead, suppose company's business is going good, but now you want some more money to expand your business. So you have various sources from where you can get money. First is invest your own money which you have earned from the profit over the years. That is the internal money, internal profit. Second is you can plan and pitch for Series B funding from venture capitalists. Third is the bank loan. Now you have that much assets, and now at this stage you are capable to apply for a loan. The loan that we got from the bank is also known as debt. And the fourth and final option is private equity. Now, private equity is an alternative investment class that consists of capital that is not listed on a public exchange. Private equity composed of funds and investors that directly invest in private companies or that engage in buyouts of public companies, resulting in the delisting of public equity. A private equity fund has limited partners who typically own 99% of shares in funds and have limited liability, and general partners. Precisely, you can just understand that private equity is just an alternative investment from other class into your company, and they also take over some part of the management and drive your company such that your company is in the right way. So now you have various investors and money with you: angel investors, venture capitalists, Series A funding, B funding, C funding, even the loan from the bank. So now you can move to public. Since you have a good reputation and you are running your business over a long period of time, so you can register your company into the stock market and go for an IPO. IPO is initial public offering, where you will register your firm in stock exchange where the buying and selling of shares take place. So in the next video we'll learn about IPO, initial public offering, in detail. So now I hope that you understand about the different kind of investors at different levels. So now if you come across any of these terms like angel investors, venture capitalists, Series A funding, B funding, C funding, debt, equity, now you can make out that the company is at which stage of funding and what is the condition of the company, and if there is an IPO you can know that okay, this company is going public now. So this is very beneficial to read financial news. So if you like the video and you want some more videos like this, please like, share, comment and subscribe. Thank you and stay safe.